Welcome everybody, Doug McKay, anti-wallstreetguy.com on the 25th of August, 2011. I will also put out another post tomorrow, depending on what the market does based on Bernanke. So you'll see another post tomorrow, but I kind of wanted to explain tonight what we're doing with an explanation technically and the reasoning behind this, and also the what if in the event that tomorrow breaks down. We closed on the cash today at 11.59 towards the lows for the day. Yesterday we closed on the cash towards the highs for the day at 11.77. We see this as a 1, 2, 3, 4, fifth wave down Elliott wave pattern. If you're not familiar with Elliott, the third wave is the longest wave, the fourth wave is the sideways wave. However, inside of this, we see a ABC corrective pattern, and we'll look at this in more detail when we pull up a chart of the SPY, but A would be here, B would be here, and then C would be up. Typically, the C wave is longer, which would take us to hopefully resistance at 1250 and or thereabouts the 50-day moving average, the blue line here, which is just above 1250. That would be the ideal scenario. Now what we did, and let's draw in a couple lines here. We did close yesterday above this area of resistance. We also got above 1150 on a close on Tuesday. And Tuesday we had decent volume, so that was a signal for us to put on a trade, or at least a counter trend bounce inside this what looks to be a 5-wave pattern down. So this is what we're looking at here. This was confirmation yesterday, and then also a little bit on Tuesday with the high volume with the close above 1150, where this was in our within our risk parameters from this support to take a trade here. So that's where we're at right now, and I'll get to percentages here in a minute. When we take a look at the SPY, this is kind of where we drew out the ABC corrective wave inside this downtrend. And again, ideally, we would want to see the C wave surpass, be the longest wave beyond the A. This could be a flat fourth, though, where we never get to 120, we never get to 1200 on the S&P cash, and we end up going lower. If that turns out to be the case, then you're going to see a post out tomorrow where we have the trend from long, meaning playing a counter trend trade, long to short again. Now the last time that we were really long this market in the managed accounts, other than when we put in a small transport trade that we scratched, was back here. We had our sell signal again. If you're viewing this for the first time on the 27th, we actually sold on the 28th. We were never long the SPY again. We are long the SPY now as of the open yesterday. As of the open yesterday, we had a fill price of basically 116.19. That was near the lows for the day. Yesterday we closed at 118.08. We erased that today. The lows yesterday were 115.92. We did not take those out on a close today. So that's kind of an arrow in our quiver with this potential bounce at this time. I would like to see this hold basically 115 or 1150 on the cash. It's anybody's guess right now, to be very frank with you guys. This could fall apart, or we could hold on here and this C wave could transpire. So we'll have to see. That's kind of why we're 6 of one, half a dozen the other right now. I think the most important thing is to either have a tight stop on the long or the short side, and or cash. Today, towards the close, when we were down over 100, for me that was a signal to sit up in my seat, and we took half of the position off, roughly at 116.28, right where it closed on our SPY position. Again, yesterday we were filled at 116.19. For now, we will not add to the SPY on the long side unless and until we were closing above the high that we put in today, which in that case, that high today was right around 119.40. 119.40 on the SPY. All right. So the overall trend right now as of the close today is long, based on us playing this counter trend bounce or this corrective wave inside this overall trend as down, ABC. Again, if we get much lower tomorrow, we will exit this trade and go to cash. Let's take a look at Apple. Now, where would we be buyers of Apple? A couple of different areas. One, if we got a close above this trend line, and more importantly, probably above 380. 380, we're at 373. Certainly we would add to it if we got above 400. And if we were to go lower in Apple, we're not in it right now, but if we put on a trade, if it was to break down through basically 358 in that area, we would exit Apple. As far as gold goes, for those individuals that we had in gold, we exited the other day, as I mentioned, at 181.60, half of our position, and then we moved the stop to 179.79 that same day. I would probably look to play a bounce, as we mentioned, in and around the 162 area. I think if we broke basically 156, we would be in a bearish trend for gold. All right, you guys, when I look at the futures right now, we're up about 6 on the S&P. Again, that could all change tomorrow. As it is right now, we are cautiously long. If we get much weaker over the next day or two, we're going to cut it loose and go to 100% cash. Quite possibly you could short here, but the market is oversold. I think you're going to get a better shorting opportunity. If we do get this ABC corrective wave pattern to play out with our long trade here, if we did get up to 125 or 1250 on the S&P cash, we would move up our stop above entry. Very, very, very tight. Because we believe that as it stands right now, like we've said for the last couple of weeks, we think basically 1350, 1360, 135 is a top on the SPY, and we see this bounce eventually being more of a shorting opportunity as opposed to this being a long-term bottom. All right, you guys, that's it. Doug McKay, antiwallstreetguy.com. We are going to put out one more post tomorrow. No video, no charts. I'll just put out one sentence, tell you what our posture is between today and tomorrow. Doug McKay, antiwallstreetguy.com on the 25th of August. We'll see you next week. Thanks.